morning, everybody. This is Live Trading Talk with Patrick MontesDeOca. We're taking a look at the silver chart here to go right into the market on this last week of 2020. Silver up 20 cents, 23.19 trading last. And if you came in long on a swing or position trade, you can see the price completed the target of 23.47 that was anticipated. If you carry multiple positions, this is a level to accumulate profit. So let's go flat here on the rest of the silver and lock in $1,000 here for the day. Let's take a look at the gold market. It appears the gold market has completed the target as well, and so let's book the gold market as well, and we're going to go flat on the futures here, taking profits on silver and gold. The core position long that we have on derivatives hold on to this long position as the market looks to be breaking out to the upside, but it is in a level of resistance. This red level here that has been identified by the VC PMI is what it's called distribution of supply. This is where you can expect the price to in this area begin to experience some supply, some sellers come into the market, and until the buyers capitulate, and in this case it completed the sell one level of 1820 and the weekly level of 1821. It completed the pattern of the extreme below the mean, or the extreme, I would say, above the mean here of the daily and the weekly average. As you can see here, for the last few days, the market gravitated around or traded around the weekly average of 1810. And the price momentum turned bullish by trading above it, confirming the underlying core position or core market direction that we have, which is bullish, and we are using any correction in silver and gold to accumulate long positions. The market rallied, it completed the pattern of the extreme above the average or the mean and activated a short-term bearish trigger. Came down, met the target, the close by target of 1817, not quite coming back down to 1810. So we are in an area where what is called overbought condition on the gold and silver. Let's take a look at some of the other markets here that we have in digital assets. We have a little bit of a downdraft in Bitcoin. As you can see, it's trading below the daily average of 49,923. So it has activated a bit of a bearish price momentum with an oversold condition on the weekly signal by trading below by 2 level of 49,562. The key signal in Bitcoin is either a close above 49,562, which would activate a daily price momentum with a weekly buy trigger, is very strong. And the energy of the market doesn't indicate the probability that the market can come down to 47,117 again. As you can see, it's gravitating around the daily average, and the trigger point is a close above 49,562 to get on the long side for a day trade or to add to your long-term position. Let's just watch the market here for a little bit. It's going to be a slow week, slow trading, and see what opportunities we can identify for short-term trading, for day trading. It seems that we are getting reports that Omicron risks are receding, and so it's been very supportive for the stock market, and equities continue to make new highs of 47.98. So it seems like we might be entering or looking at the light at the end of the tunnel with regards to the to COVID and the pandemic. Possibly could be entering its last stages of the virus, which is that it begins to mutate and recede into lower levels of infection. So I'm optimistic that we might be putting this behind us here and begin to focus basically on the real economy, on getting back into some kind of normality once again. And so the question remains with regards to interest rates, with regards to the economy, is how fast, you might say, is the acceleration of demand, and pretty much that's going to determine the inflationary factor, I believe, that we seem to be building as a consequence of the shortage of supplies. And if we begin to recede or resolve the issues of supplies again, then we obviously are beginning to move into a more normalized economy that is based on the supply and demand. But there is a lot of pent-up demand. There's a lot of people that are, anxious to go back into some kind of normality here after 2 years of hibernating, pretty much, or of this tremendous pandemic that we experience. But I'm very optimistic that as we move into next year, things are going to stabilize a little more clearly for us. The question is, what damage was it done, and particularly in terms of what some people call zombie companies that are still holding on to DRN, so to speak, by simply, borrowing, to pay the interest they borrowed. It's I believe something that the market needs to address and needs to deal with at some point. And I think it will happen, particularly if we begin to see the pressure of interest rates moving up, the cost of money moving up, and how fast interest rates are going to go up. That is a big if. So as we take a look at the markets that we trade here, gold, silver, and Bitcoin, I find that there is a tremendous anomaly in the gold and the silver market, with gold ending negative for the year, 7-8%, and silver down 13-14% approximately, while we have record inflation levels, we have a tremendous economic demand, you might say, waiting on the sidelines, and it's just a question of resolving some of these bottleneck issues with regards to supply. And I think that's going to determine the pressure on raising interest rates. But if we take a look at the reality of the debt, which is approaching $30 trillion, it is impossible under the current situation to raise interest rates. So I think we're going to hear a lot of talk about raising interest rates, but I think that it's going to be primarily talk outside of the tapering that's being done, that's going to be reduced. And again, the question is, how fast after tapering completes are they going to raise interest rates? And that's still an unknown factor, depending upon, again, the economy, and also the challenge that interest rates, higher interest rates, will face with the level of debt that we have. One of the things that I want to take a look at here in gold, for example, is the last time, which was in 2015, 2016, was the first time that the Feds raised interest rates. And that was the bottom of the market. That was the bottom of the gold market. And in 2018, actually, the Feds obviously reversed that policy of raising interest rates. And we just saw a tremendous rally in precious metals, and that was basically the bottom of the gold market. And so, if interest rates do go up this time around, there's a potential that gold can react in the same way. The debt level is much higher than it was back when the bottom was made in the gold market. Most people think that the metals, that raising interest rates is going to be bad for the gold market. And it's bearish for the gold market. I think what the gold market will anticipate is that raising interest rates is going to be bad for the economy, bearish for the economy, and increase the risks across the board, particularly by some of the zombie companies to go bankrupt. And it may be possibly the best thing that happens here is that interest rates do go up and clean the high leverage that's in the market right now. Record level leverage. So as we enter into 2021 with precious metals down negative for the year, moving into this scenario that is unpredictable with regards to inflation, it doesn't appear to be transient. With interest rates much higher above the 2% that was the goal of the Federal Reserve. It's really a precarious situation for the Feds in terms of the policies with regards to interest rates. It is my opinion that interest rates cannot go up. They may manipulate the short end of the curve, but the long end of the curve where the debt really exists is going to be manipulated. They can't allow interest rates to go up. And what we seem to be getting actually is more negative interest rates. Particularly when you take a look at the 10-year note. It's trading on the average of about 150, with inflation running at about 4.8 or 5%. You're looking at negative yield, negative real rate of return, nominal rate of return that is negative. It's negative by about 4 points, 4 or 5 points. And this is the unfortunate current situation that the US dollar is in as a consequence of all of this stimulus that was pumped in, obviously, as a consequence of the pandemic. It's putting the US dollar at jeopardy. But interest rates cannot go up to save the US dollar, so to speak. There is a very strong interest in digital currencies as a consequence of that very same factor, which is that people are looking for other alternatives to the US dollar, and Bitcoin to mention one in particular that has been around and I believe is the leader, is a perfect asset to diversify into if you want to have your assets in a decentralized ecosystem. It's giving you the opportunity to do that, but there are risks to go with it. So you got to measure, pretty much what those risks are in relation to your personal situation. Continue to hold on to, as I said, your core position, as I think that once again the metals are offering a tremendous discount, particularly as we end this year. As you can see, the gold market made a low of 1785 here, which is the extreme level here in blue. This area below now, 1800, is identified as the area to accumulate supply. And what we trade is basically the extreme below the mean, which is in the area blue. We accumulate. The signal was activated. The weekly signal was activated by closing above 1799 on the 22nd at 8:15 a.m. And the target of 1821.60 was completed here this morning. At 5:30 a.m. and it completed the daily target of 1820, the weekly target of 1821, and the weekly sell one target of 1817. And so in terms of the futures, these levels are used to lock in profits and go neutral and wait for the market to tell you the next trading signal on the futures contract. In terms of the big picture, obviously, we're looking at a very bullish pattern developing here within this major uptrend channel that essentially indicates this could be the bottom of the third leg. First leg, second leg, and the third leg should reach at least the upper end of this trendline resistance. Which is in the 1988 level, the upper end of this channel that you see here building since we pretty much anticipated the seasonal low, which began September 28 for the calendar year that we use. Identified the first leg of this 5-leg pattern. We went up into 1884, came down to test that low by the 15th of December with a low of 1753. Now we have resumed the beginning of the third leg and the uptrend. And you see here the market completing the targets, the daily and the weekly targets. So we use these levels here to lock in profits, to coach and teach our traders here basically on how to use this indicator to drive your trading. It's a probability model, and here it tells you short term the market is a bit overbought. Now the next signal on the daily target is 1829, which we could still potentially see as it is still active as the sell-to target for the day. It's been a very frustrating market to trade gold and silver for the last few years, needless to say. But I believe the time will come when the gold and silver will adjust to their mean. It's a natural process the market goes through, and the longer the anomaly stays, the stronger the reversion will unfold, particularly if prices are being suppressed artificially. So my expectations are that we will see 2000 in 2021. In fact, over the next 3 months, the VCPMI is indicating the possibility that if we trade above 1840, we're going to accelerate towards that level of 1950 to 2000 relatively fast. Continue to be patient. Continue to follow the long-term bullish trend in the market and use any of these corrections here to add to your position. Be patient, my friends. The day will come. It's coming sooner than you think. In the meantime, have a great trading day. Be safe. We'll talk to you soon.